Welcome to Sophie Daddy's channel. So, what if you could profit just from being right about the future? And I'm not talking about picking stocks. I'm talking about betting on pretty much anything. An election, the next inflation report, even the outcome of a secret military operation. This is the wild, totally fascinating world of the new stock market for everything. I mean, think about it. Instead of just reading polls or watching pundits yell at each other, what if you could put your money where your mouth is? What if you could invest directly in who's going to win the next presidential election? And it doesn't just stop at politics. What if you could trade on something that hits your wallet directly, like the next monthly inflation numbers? This isn't some sci-fi concept. It's happening right now in a brand new market that's absolutely blowing up. Okay, so what we're talking about are called prediction markets. Basically, they're financial exchanges where you're trading contracts on future events. The way it works is actually pretty simple. If you think something's going to happen, you buy a yes contract. If you're right, that contract becomes worth $1. If you're wrong, poof, it's worth 0. The key thing to wrap your head around is that the price of that contract, let's say it's trading at 60 cents, that price reflects the market's collective guess, a 60% chance of that thing happening. Right now, the whole scene is defined by this massive showdown between two completely different ways of thinking. It's kind of like a duopoly that's shaping the entire future of how we trade on information itself. So on one side, you've got Kalshi. The easiest way to think about them is like the Wall Street of events. They're based in the US, they're fully regulated by the CFTC, that's the Commodity Futures Trading Commission, and it all works just like a regular stock market. Then on the other side, you have Polymarket. They're the global crypto frontier. It's an offshore platform built on the blockchain, and it operates completely outside of the normal financial system. And this big difference in philosophy, well, it creates two totally different experiences for you, the user. With Kalshi, everything is by the book. You have to verify your identity, that whole KYC process, and all your trades are in good old US dollars. Polymarket, though, is what they call permissionless. All you need is a crypto wallet. And you trade in USDC, which is a stablecoin that's always supposed to be worth $1. It's really the difference between walking into a bank versus using a decentralized app on your phone. This slide really just lays it all out side by side. You can see Kalshi is regulated, you can use it in the US, and it uses dollars through a normal centralized system. Polymarket is the total opposite. Offshore, crypto-based, and yeah, it's blocked in the US. The biggest tech difference, though, is how they decide if an event actually happened. Kalshi has a central group that makes the call. Polymarket uses something called the UMA Optimistic Oracle. You can think of it like a decentralized court. If people disagree on an outcome, the folks who hold this crypto token called UMA get to vote and decide what the truth is. So the billion-dollar question, how well do these markets actually predict the future? Well, the 2024 US presidential election was basically the ultimate test for this idea of the wisdom of crowds, this theory that a big group of people putting real money down can be smarter than the experts. And the results were pretty amazing. As you can see on this chart, the traditional polls from places like 538, they were basically a coin toss, coming in at just under 50%. Prediction markets, well, they did call the winner way ahead of time, but they were super volatile. Prices were flying all over the place. But the real surprise? The most accurate prediction of all came from the old school financial world, options traders on the S&P 500. 57.7%. That was the final number for a Trump victory coming out of the S&P 500 options market. So why was it so accurate? Well, because these traders weren't just betting on who they wanted to win. These were huge, sophisticated institutions managing billions of dollars, and they were hedging against very real economic risks. They were pricing in the actual economic impact of a presidency, and that created a signal that was way more stable and reliable than all the political hype you saw on the prediction markets. Okay, so beyond just trying to predict the future, these markets offer a really powerful new tool for the everyday investor. We're talking about using them as a super precise way to hedge your real-world financial risks. Let me just walk you through a perfect example. Let's say you have a bond portfolio. You know that if inflation goes up, the value of your bonds usually goes down. So, step 1, you've identified your risk. Step 2, you go onto a platform like Kalshi and you buy yes contracts on a market that's predicting inflation will be higher than expected, something like CPI to be greater than 0.3%. Now, step 3, if inflation does spike and your bonds lose money, your prediction market contracts pay out. Each one settles at $1. That cash payout can directly cancel out the losses in your portfolio. It's like buying insurance on the economy itself. But, and this is a really big but, this powerful new tech comes with some serious baggage. We have to talk about the rules and the risks, because these markets are really pushing the limits of our legal and ethical rulebooks. Get a load of this story. In early 2025, a trader on Polymarket bet $32,000 that the president of Venezuela, Nicolás Maduro, would be ousted. Just a few hours later, a covert operation led to his capture. That trader walked away with over $400,000. And that one trade pretty much blew the lid off the biggest legal challenge these markets are facing. So the obvious question is, right, was that insider trading? And the answer is, well, it's complicated. You see, the insider trading laws we all know about from the SEC, they apply to securities like stocks. But these event contracts, they're often classified as commodities, which are governed by the CFTC. And the rules there just aren't as developed for this kind of thing. It's a huge regulatory gray area, and you can bet lawmakers are scrambling to figure it out. And for investors in the US, the tax situation is, frankly, a huge drawback. First off, any money you win is taxed as ordinary income, so at your highest possible rate, not the lower capital gains rate you get with stocks. Second, if you have losses, you can pretty much only use them to offset other gambling winnings. So the bottom line is, you can't take a $5,000 loss from a prediction market and use it to cancel out a $5,000 gain in your stock portfolio. That makes them way less tax efficient than your traditional investment. So we're left with this massive, fundamental question. Are these markets the future of information, this incredible tool for forecasting and hedging risk? Or are they just a new, high-tech, global casino that's full of speculation and legal landmines? Honestly, the answer is probably a little bit of both. And how that balance tips is going to be one of the most interesting financial stories to watch over the next decade.